Always appreciate everybody for tuning in live, listening in the replay. Greetings, greetings, greetings. Appreciate everybody for tuning in live, listening to replay. It's always a pleasure to have everybody listening to the Vault every single week. This is the Vault episode 253, self-dealing, living out of your business. Definitely want to do this episode today because we know that this is the Achilles heel of so many entrepreneurs, and we're going to go ahead and hit it face first and bust it down, have a real candid and straightforward conversation because there are many people living out of their business, ladies and gentlemen. And we're going to show you how you're literally self-dealing. You all can look this up. You all can go to your lawyers, go to your lawyer for your business, ladies and gentlemen. You need to have a lawyer around for business litigation. You have to. It's imperative. So when we talk about self-dealing, this is one of the criminal acts that can get the bail pierced on the corporation. Well, let's talk about it today. So this is the Vault episode 253, self-dealing, living out of your business. How does it look? It looks like this, ladies and gentlemen. You're literally confusing personal expenses with business expenses. See, this is what you learn in Trustee Training. If you all want to enroll in Trustee Training, feel free to reach out, Christian@trustchristian.com. That's the email, Christian@trustchristian.com. But once again, in Trustee Training, you learn. You got to separate your business from your family wealth. You got to separate the business from the personal. That's the problem with entrepreneurs and investors is they're living out of the LLC. They're living out of the S Corp. They're living out of the C Corp. You want to know how it looks? You're not filing the business separately. The business is not filing on 1120. You're filing the money that's coming through the corporation on your 1040. Well, guess what? That's the wrong way to do it. How? If you're filing the taxes on a 1040 for the LLC, and the LLC is paying for women to get their nails done, women to get their hair done, for men to get their haircuts, it's paying for car payments, it's paying for cell phones that aren't even in the company's name. Self-dealing. You want us to say it again? The company's paying for a cell phone that's not in the company name. Self-dealing. What do you mean? The cell phone's in your name? Self-dealing. Commingling of funds, right? So let's talk about it. Why not put the cell phone in the company name so it can build business credit through Experian Business? Verizon reports, AT&T reports, T-Mobile reports. It's business, not personal. The way that you stop self-dealing and not live throughout the business or living out of the business is by putting everything in the business's name, getting a quality operating agreement, getting your bylaws in order, going to a quality lawyer and saying, look, I need this document to reflect the best fringe benefit program possible to any CEO in this industry. Ladies and gentlemen, Bill Gates doesn't pay for his car. The company does. Bill Gates doesn't pay for his cell phone. The company does. Bill Gates doesn't pay for his house. The company does. Well, how can a company pay for his house? Because it's a fringe benefit. So you all can go look up publication 15B. You all can go look up as well. Appreciate Mississippi for tuning in live. Appreciate Atlanta for tuning in live. Appreciate Oklahoma for tuning in live. All you all listening live, listening to replay. We're going to go to publication 535. 535 is business expenses. Wow. That's what we're here to talk about. You not living out of the business and self-dealing, but calling it an expense. Your hair is an expense. Well, it doesn't matter what business you're in. If you don't have your hair done, ladies, you can't do business properly. The IRS knows that. But if you don't have it in the operating agreement that it's going to pay for beauty expenses for the CEO, like you think Bill Gates is paying for a haircut? No, that goes on a company credit card. It's a de minimis. It's such a minor expense to the income of the company. It's a business expense. You can take a lot of expenses on the public side for all you all that are operating out of LLCs and C Corps. Appreciate Oklahoma for tuning in live. Appreciate Texas for tuning in live, listening to the replay. You all can First of all, there's no difference between Bill Gates and you all. That's the difference. If you haven't gotten it down yet, the business structure is what separates us all. You best believe it. If you're not in a proper structure, your expenses are different. See, in trust in the private sector, the expenses are different. See, the deductions are different in the private sector, just like the expenses are different in the public sector. But are you maxing out the fringe benefits? Are you maxing out the business expenses? Ladies and gentlemen, taxes are a business expense. Go look at your tax forms on the business side, not a personal side, because it's business, not personal. We could pull up the 1120 right now, put it into the chat, and you can scroll to the deduction section, and it says taxes under deductions. That's not Trust Christian in the Vault. Oops, did we blow the can for your accountant that's doing you in your rear because they don't want to give you tax minimization planning? They just want to take your money and say, pay your fair share because they got a job because you hired them? You got to find better accountants. It can't be Uncle Larry. It can't be Auntie Sue. Okay, she got a degree in accounting and she doesn't know how to tax plan. She's an accountant. Oh, we're going to do an episode for bookkeepers versus accountants because a lot of y'all getting that twisted too. A bookkeeper is what you need. You don't need an accountant, but we're not going to go there. We're going to put that in an episode and expound upon it. But for right now, self-dealing is a criminal act. You could go to jail for this. So why won't you go spend? Yeah, here we go. Everybody wants to know the price because entrepreneurs, they trying to cut corners. Investors, they trying to minimize the opportunity costs and their risk. Okay, and their exposure. So let's go there. For you to get the proper operating agreement in place should not cost you more than $300 in every state except for California and New York. And maybe the torturous rip-off state of Illinois. Because that's where they ripping you off. Bottom line. If you in Illinois, for somehow, it's just one of the... We're not even going to go there. It's a waste of time to talk about that state. But we're going to go there. If you're in New York, you're paying high prices. If you're in California, you're paying high prices for documents. It's just a reality. So, let's talk about the other states. Because like I say, if you're in other states, you amending your operating agreement that reflects the fringe benefits, that reflects the proper business expenses, the per diems, all these different things, it shouldn't cost you more than $300. You should go to a local lawyer, contact the local lawyer today or tomorrow or whatever, and say, hey, look, you can say, hey, look, I need an operating agreement, the best operating agreement for this state, for the CEO of this state in the same industry. And if you can't get the job done, it's cool. I'm going to the next one. But, okay, you're going to get, some of y'all going to chicken up and you're going to let somebody going to hit you with $500 because you named the price first. So they're going to say, well, I'll do it for $5. Okay, I'm not paying $5. I'm doing it for $4. If you can't do it, I'm getting up. But y'all got to negotiate as entrepreneurs, investors. But point being is they're giving you the best operating agreement for your industry. If you're in real estate, if you're selling real estate and you got to wear clothes every day, how are your clothes not a tax write-off for the company? It's a uniform for the company. If you don't look good, how is the company going to sell property? This is retarded. But people don't want to go put it in the operating agreement as a uniform, but they want to wear red bottoms. The red bottoms are a tax write-off. There's no limit to how much the shoes have to cost. But on the public side, there is a statutory limitation on clothing. Now you got to remember, is the company buying clothes for you or is the company buying clothes for the company? Is the company paying for meals for you or is the company paying meals for any executive or any employee that's sitting in that position? That means that if you were replaced tomorrow, the same standard operating procedure is in place for that particular employee or that particular executive. And guess what? Executive packages are different than employee packages. Do you think Bill Gates has the same executive fringe benefits package as an employee of Microsoft? Now, we're using Microsoft as an example. This may not be as accurate as it needs to be because we don't even think he works for that company anymore, but we could use Elon Musk. He still works for Tesla. Do you think Tesla
It's paying for everything that Elon's doing. Elon doesn't even buy the sneakers that he's wearing. Why? Because they're company shoes. The shoes he wears around the plant, Elon can't walk around barefoot. It's a safety hazard, right? It's a hazard to walk around barefoot. Right. That's called a business expense. For the business. It doesn't matter who's filling that position. It's the business. So that's where you have to get out of personal mode. Oh, I'm doing business in my name. I'm not doing business for me. The company's not doing business for me. The company is doing business for itself. And I'm okay with that. So I don't need anything from the company. Why? Because the company is going to take care of those expenses. It's not going to take care of those expenses for me, because that's personal. That's self-dealing. The company is going to take care of the executive. The company is going to take care of whatever employee is in that position because it's a part of the fringe benefits package for that position. So now you got to question what position you're sitting. Are you an executive or are you an employee? Well, in a business, you hold multiple hats. Now you can see how the expenses can rack up because you're not doing business on your behalf. The business is you're doing business on behalf of the business. So it's a business expense. Appreciate the Bronx for tuning in live, listening to replay. Feel free to type into the chat where you're listening live from. Listening to replay, always appreciate it. So, self-dealing. We already know 80%, at least half the entrepreneurs that contact us, they didn't go get the operating agreement. The reason why you got to read Publication 15B is so when you go talk to these accountants, when you go talk to these lawyers, you can have an educated conversation. So you can say, look, I need you to put in there that I can get a cup of coffee and a donut from Starbucks every day because that's a part of de minimis. It's such a small expense that the IRS allows it to be written off. Y'all got to look into that. See, people are so focused on growing the business, they're not focused on managing the business. And then if you don't manage it, do you have a team around you that's helping you manage it? That's why you got to go out and find good accountants and good lawyers. So when you go talk to Uncle Larry or Aunt Sue, she doesn't say, you shouldn't do that. Well, here's what we tell trustees. If it's not illegal, you got to let them know. You're either going to do it or you're fired. If it's not illegal, you got to do it or you're fired. Write it into the agreement. What's pushing the line? You maxing out all those benefits. Is it in the goddamn publication that you can do it? Oh, I forgot. Your Aunt Sue. You got a 4-year degree. You don't know much. You don't write contracts for Bill Gates. You don't write contracts for Elon Musk. You don't know what a true executive benefits package is. Oh, sorry, Uncle Larry. You don't know what an executive benefits package looks like. That's what it looks like. You know how many entrepreneurs are walking around with no insurance because they don't know how to build it into the revenue of the company as an expense? Key man insurance, some type of cross purchase agreement between partners in a business. Appreciate another Atlanta tuning in live, listening to the replay. Appreciate Atlanta. Hot Atlanta. Those are expenses, ladies and gentlemen. But people don't know that. Well, people contact us, they say, so how do we put the car in the company name if I have a car note on it? You can contact the vault. It's private conversation. We want to make sure that it's not legal counsel, but we consult so you can find proper counsel so you're not doing it illegally. It's not illegal to have property title in another name and it's making a payment for someone else. That's like saying, can the vault pay your mortgage? Yes. Can the vault pay your car note? Guess what? The car note company and the mortgage company, they're happy with as long as the bills get paid. They're happy when the reference number of that account is being paid. They want it paid. They don't care who's paying it. They want to know they just want it paid. That's where we are. But people are scared, ladies and gentlemen. See, it's that word called fear. And you can't be in our environment called entrepreneur and investor if you have fear. This is made for the strong. This is the ones that are willing to take risk. We have to take risk as entrepreneurs, investors. So let's get to the money. You got to focus on growing the business holistically. And that means taking the time. Did you all know that literally in the back of IRS publication 15B, it literally tells you how long it should take you to read that document, how long it should take you to administer it. In publication 535, it actually tells you how long to read the document and how long to administer it. Are you really making an excuse that they have it timed out to a science? See, the numbers don't lie. They got it down to a science how long it should take you to do these things. Go check it out for yourself. The publications are waiting for you. Oh, here's another one. Net operating loss. We got to make sure we give it to y'all all tonight. Noel publication. It says 536. Publication 536. Net operating losses for individuals, estates, and trust. There you go. How you going to know if your accountant... So we're not going to go there with this account stuff tonight because we're going to go in on these accountants. These accountants are ripping people off. Oh, they got to charge you all this money to file taxes? Are you serious? Like, who's at risk for the taxes, ladies and gentlemen? Is it you, the entrepreneur investor, who's actually going to have to pay the damn taxes if there's something wrong? Or the accountant that all they do is submit it? Are you serious? All you do is submit it. We're not talking about preparing. Submit it. Remember, they submit the taxes. And they're charging arms and legs. Publication 536, net operating losses. Feel free to go ahead and get it in. Get those readings under your belt. This helps you for conversation when you contact the vault for these type of things. When you contact the vault for consultation, you say, okay, I know that their expenses, we giving out a game right now on you doing you going and reading over these documents so you can have a better conversation so you're not doing illegal moves. Because there are a lot of people that say, oh, the company's paying for this, the company's paying for that. But is it in writing? See, it's not about the form. Oh, the company can do that. Yeah, the company can do that. It's about the substance. The substance is it written in the documents? Is it legal for the company to do that? Do you have an executive benefits package? That's the difference, ladies and gentlemen. Are you living out of the business? Because if you're living out of the business, you're doing it all wrong. Bottom line, you can do it legally and you can move properly. And those advantages are available to you just like they're available to Elon Musk. Of course, he doesn't have a personal bank account. Why would he? Oh, but, his company's generating all this money. First of all, y'all don't even want to know that the company is operating in the red. But it's generating revenue. There's a difference between gross and net. So how do you think those expenses are being paid and he's still in the red? Because he's taken from gross. There is no net. So, ladies and gentlemen, feel free to reach out Christian at Trust Christian if y'all want to go there. Christian at trustchristian.com for consultations, Trustee Training. But this is what we go over in Trustee Training. And we're going to bring a ton more episodes of this caliber right now because we get consultations all the time. The consultations ran back up. They say the economy's doing good. They're looking to change their lives, to get businesses going. They're not looking to be up under the thumb of a boss. They're looking to take risks. They're not looking to live in fear anymore. Self-dealing. It's a criminal act. Look it up. They're going to say that the company, that's why they say the LLCs and the corporations are disregarded entities. Because you're getting separated from yourself. Think about how many entrepreneurs that you even may know. You can ask them, are you filing the taxes for the entity, which is the LLC or the C Corp, on your 1040 on 1120? This is why we do the vote. Because for all these guys that are dancing on stage, rapping and rapping, and they don't want to tell you their business structure. But business structure dictates liability. The tax liability. The personal liability. Right. The things that keep you poor. How can you get ahead if you're giving all your money away? For ignorance, for education. Not because you're not working hard. Oh, you're working hard. You're working hard as an entrepreneur. But you're giving it all away because you got half the story. You focused on growth. What about the management? The management of the business. Management is everything. Maintenance is everything. It's business, it's not personal, ladies and gentlemen. Y'all can go check out the publications. Feel free to reach out. At the end of the day, we just letting y'all know the same thing that everybody else didn't want to let you know. Because guess what? This is the part about it. See, the vault loves competition. People don't want to believe that we live in a competitive society. Well, do you think Samsung and Apple aren't competing? You think PlayStation and Xbox aren't competing? Wow. The people that aren't competing, they want a participation badge. They're poor. They want a participation badge. There is no participation badge. It's called, if you make money in business, you can feed your family. If you don't, they don't eat. That's competitive now. But guess what? We do live in an abundant universe, so be very aware of that. We do live in an abundant universe, but it's competitive. Apple's competing against Samsung. PlayStation is competing against Xbox. You're competing. Play ball. That's why they have these laws in place for you, so you can write off and compete. Appreciate you all for tuning in live, listening to replay. And this is another thing. Y'all already know the law about a certain culture. If you want to hide something, put it in a book. So we about to see all y'all that's about to reach out to the vault that didn't even read the publications that we gave you. We gave you the shortcut. We gave you the publication. Now you can read it. This is why certain cultures have not advanced. Because they don't want to read. They think you can watch it on Instagram. They think you can watch it on Facebook. Once again, you got to read. You got to read so you can have an intelligent conversation with your accountant. You got to read so you can have an intelligent conversation with your lawyers. Because guess what? Who's paying the lawyer? Who's paying the accountant? The company is. And are you a bad fiduciary? We might have to run through a few accountants. We might have to run through a few lawyers. They're not all created equal. But what does the vault share with you all? To go get the best, the ones that you can't afford. Because guess what? When they mess up, they got malpractice insurance. Not Uncle Larry and Auntie Sue. They don't have malpractice insurance. But when you're practicing law, don't they call it practicing law? Don't doctors have malpractice insurance? Lawyers have malpractice insurance. Good accounting firms, they have malpractice insurance. So when they mess up your books, that's their fault. But people want to go be cheap. If you're an entrepreneur, it's like asking you, is there a cap on your income? If you're an investor, is there a cap on your income? No. Then don't put a cap on the expenses. Come to find out, the lawyer fees, the accountant fees, those are part of the expenses. It's a write-off from the what? The gross, not the net. The gross. It's business, not personal. Separate your business from your family wealth. That's the first stage in trustee training. That's why people deal in trust. It's because they separate their business from their family wealth. You have to separate it. You have to. There's no asset protection in keeping it all in one entity. You have to separate it. It's business, not personal, right? Appreciate you all for tuning in live, listening to replay. Feel free to type into the chat where you're listening from. Feel free to type into the chat any questions that you may have real quick related to self-dealing or living out of your business. We're here to answer any questions in a quick second. This is that consultation that you don't pay for now because you got the episode. Self-dealing. Don't live out the business.
read the publications, go back to the episode. If you're a late comer to the episode, tuning in live late, you just go back and listen to the episode, or y'all can read the publications and move forward. But all the information is in the publications. Stop self-dealing out here. There's a lot of people out here self-dealing. And if you don't have a good accountant or lawyer that can explain that to you or even have a conversation with you, you got to get a new one. Bottom line, you guys as entrepreneurs, investors, that's your job too as a business person. It's to find the best and do business with the best. Not to be sitting there talking about, oh man, I'm not, this person can't do it. If the person can't do it, you got to go find the best. You can interview people, call people. You got to call people. Appreciate you all for tuning in live, listening to replay. Feel free to contact Christian at Trust Christian for consultations. After you read the publication, still have more questions. Otherwise, it's time to grow and prosper. Get your money up. Peace.